In this video, I'm going to analyse Greatland Gold stock by giving my views on the business and whether I would personally buy shares of GGP right now. And if you find the video useful, please drop me one of these to support the channel. Greatland Gold engages in the exploration and development of natural resources in the UK and Australia, with a focus but not just limited to gold, but also nickel, cobalt and copper extraction. GGP seeks to increase shareholder value inorganically. This would be primarily through mergers and acquisitions, by the acquisitions of exploration and development projects in underexplored areas. It's worth noting that they also hold a 100% interest in a fair few select projects, which I'm going to place on the screen here. GGP is listed in the alternate investment markets, or AIM, has 8 employees and a market capitalisation of £1.4 billion. Despite their larger than average market capitalisation compared to a majority of the AIM markets, they very much remain a small fish in a very big pond. This is because there are many mining companies, all with different niches, goals and ways of extracting value, and therefore many mining companies looking to acquire these exploration and development projects, maybe not necessarily in underexplored areas, but there's still a demand. Therefore, GGP has the advantage of looking for underexplored areas or places that typically other mining companies would have overlooked, but that's not without its risks. When looking at the price to earnings ratio of GGP, we can see that it is negative. This hints to us that they are either currently unprofitable or that they have negative shareholder equity due to recent shareholder dilutions. So when we compare their market capitalization to their net assets, we can see that their price to book ratio is extremely high compared to the industry and the market. This either tells us investors are very bullish or positive on the company and therefore are more willing to buy shares at perhaps less of an asset value, or they have very limited assets on their balance sheet. It would be silly to look at the earnings growth in the last few years simply because they have absolutely no revenue. And I believe it is due to their projects being in very much early stages, meaning they are still surveying the lands and seeing how much or whether these lands or projects are economically viable to start drilling. And they are either not ready to resell or even ready to produce assets from them. This means that GGP are very much loss making. In the last financial year, they had actually lost £5.1 million. It's also worth noting that they have a negative free cash flow, which would be very obvious to an experienced investor, but you can use free cash flows, and if they are positive and steady, obviously in a business with that actually has revenue, but you could use this to differentiate some stocks from others. Of course, GGP has a negative cash flow, but in future, if you are looking at smaller cap listed companies, free cash flow could be a great indicator to use. Because Greatland Gold lost £5.1 million in the last year, we need to dive into their balance sheet to see if they're able to support this for an extended period of time. Assuming that they do lose the same amount each year, this can quickly rack up a cost. Looking at their balance sheet, and it is of great quality, their short-term assets do outweigh their short-term liabilities and long-term liabilities combined. However, even with completely zero debt on the balance sheet, they do have a limited cash position of £6 million. This means that assuming that obviously that their cash losses don't increase in any way, shape or form, which is very unrealistic, that it would only take just over a year before the company is struggling for money. This means that it's very likely that the company is going to be doing shareholder dilutions or raising capital. Although on the other hand, they do have an advantage with this. They are a £1.4 billion company and they're only losing around £5 million per year. They would only need to dilute 1% of the existing share pool, which would not very much affect current investors, perhaps maybe with sentiment, and this could give them £14 million, allowing them to survive for more than 2 more years. And that ultimately gives them the opportunity to survive longer, to continue generating value, and over that next 3 to 5 years, they can either resell or sell one of their projects or start extracting rare minerals from them. And if you're interested in gaining value, why not sign up to Trading 212 using my link in the description down below to get a free share worth up to £100 when you deposit just £1. Link in the description down below to sign up, or the promo code at the bottom left of the video. I think GGP has a fair few risks, starting with the mining industry. To start, you really need licenses to operate, and whilst at the moment they do have licenses on their existing projects, these can be hard to come by and get. This is because legislations and regulations are constantly adapting and changing, and as a society or as a population of the current planet, I don't know why I said it like that, that's as if in the next few years we're going to move to Mars or something, but the idea is that we're becoming a lot more ethical and really looking out for the environment, our society, and also the people. This could mean that buying land in mining areas, you had the example of Rio Tinto that were mining on an ancient burial ground, this could really limit the possibilities for mining in the future. Furthermore, this can cause a lot of environmental damage if not done properly. This means that there are higher costs to operate all of this. This could mean as simple as damaging the environment so that there is chemical runoff into the local water supply, which is killing off the local wildlife and fauna. Another risk is the management. They may be of a very high quality, but you never know. How can they truly decide what to do to get the maximum amount of value from their current projects? They've mentioned that they aim to get shareholder value by either selling their projects, using the materials gained from it to therefore have an upkeep of production. But when do they decide to sell these or to continue holding them and then sell at a later date? It's a very tough decision to be in, and I think this would be a very difficult company to manage as they upscale. They've also mentioned that they could create a joint venture or a sign-out IPO, but it really does depend in the moment, and perhaps shareholders may not like this decision and could push the share price down. However, GGP still has a promising future, and RNS for their drilling update in their Scallywag surveys could really be coming imminently. This could really give an uptick to the shares of the stock, as it could show a lot of promise, as it is in their Western Australia location in their joint contract with Newcrest. And if this shows promise and the land is economically viable to commence drilling and mining, this could really be the first step for the company to start generating value. Furthermore, Greatland Gold recently appointed a new CEO that would be better placed to upscale the company. You may think this is weird, but the previous CEO had mentioned that it was at a natural point to hand over the CEO to someone else that can progress it to the next level. The next CEO was recently the Chief Financial Officer in Northern Star, an Australian listed company from 2014 to 2019, in which the market cap of that company increased from 700 million Australian dollars to 8 billion Australian dollars. So that shows promise for the company, that there is a lot of potential for this company to keep growing to new lengths. But I find this pretty interesting. This is because that Scallywag RNS, well, if it's not going to be promising, why would they choose now to change their CEO? And this is pure speculation on my behalf. But potentially they've decided that now is a natural point, as he had said, to change the CEO so that once the Scallywag drill surveys are released to the public and they may show a lot of promise, that then they could commence mining and really get ahead. If you'd have owned shares of GGP in the last 5 years, you would have gotten returns of over 33,854.5%, which is not even worth comparing to the markets. For a little bit more scale, however, in the last year they had managed to increase by 1,975%. I think this could be a good speculative investment for those looking for a little bit more risk in their portfolios. I would definitely not consider adding a lump sum to this position, but rather just adding small consistent sums of money into this stock so that you can build up a position, as I imagine it's going to be very volatile. And looks at the recent share price chart could show that there is a lot of FOMO, or the fear of missing out, as this has the attention and popularity of a lot of investors. For instance, their top holders in the company, for instance, would be Hargreaves Lansdown's nominees, which is basically the people that hold the shares for the customers of Hargreaves Lansdown. This could indicate to us that there are a lot of retail investors, which would be the general public, and therefore could mean that there is a lot more speculation, volatility, and a lot more risk. But the idea is that if you diversify a small amount of your portfolio to this stock, perhaps 2%, that you could get a lot of gains. Even if the share price doubles in the next 3 years, that means you would have gotten a decent enough return to really push your portfolio upwards. Although there is a concern that they are a £1.4 billion market capitalisation company, and it could struggle to grow at definitely the pace it has been in the last few years. Although it really depends on what the future brings, and if these RNSs are positive, they're able to commence mining in some of their underdeveloped project lands, and they have more surveys saying, hey look, the gold content in the land is very promising, then this could really be a winner in the future. However, this is not a company I intend to invest in the current stage. I think it is far too speculative. That's because I like to invest in businesses that know how to make money. They don't have any revenue, and sure, the management could be of a great quality, but I really want to stick with a company that I can predict how well they're going to grow over the next few years, and that would explain my limited holdings in the portfolio. I don't doubt that this could be an amazing investment to have, but I would rather just put my money into a more secure company that, as I said, I can predict how fast they will grow and they're resilient. Whereas this company, they have negative earnings, negative free cash flow, no revenue, and their assets haven't been appreciating at least in the last year, which would have been their project land. And with their size of a 1.4 billion market cap, that's getting very close to some of the companies in my portfolio. An example of this could be Games Workshop, which is 3.5 billion. Sure, it's about 2.75 times bigger, but at least Games Workshop is making a lot of money. I'd also like to mention that it is very, very likely I missed out on some crucial data, and that's because it's really difficult for me personally to research this stock. There's so much speculation and ramping on the LSE chat boards where I would typically glance at for a brief few moments to get a general insight on the company, that it was very difficult to find accurate and valid data other than obviously the fundamental analysis. So a lot more time had to be taken to dive into the investor reports and relations, and when I'm not that interested in the company itself, it did prove to be a difficult video to make. Next week we will be starting the US stock analysis, and hopefully we can really push out from there. Which would mean that with the US stock analysis, it would be every other week, and the UK is the same. So 1 week US, next week UK. If you're interested in my 10 UK stocks to buy in 2021, then click the card at the top right of the video. Thank you for watching. I'm Osborne Foreman. Have a great day.